Good morning, traders. Manny Cabrera here, founder of MDC Trading Academy, with today's pre-market forecast for Friday, June 11th, end of week review. Let's quickly jump to our news items for this week as we close the week this day on Friday with the prelim UOM, University of Michigan Consumer Sentiment at 10 a.m. A lot of analysts are looking at this number as a key confirmation of the continual expansion of our economy in spite of the headwinds of inflation and, of course, the valuation on stocks. Our earnings need to catch up. They stay moderately bullish in reference to the economy and the market, but this number is a really key number. So keep your eyes open for this one. Please try to stay out of trades within the time that this is going to be released. Let's jump to our daily chart as we normally do to get to our bird's eye view of the market. Another record high established yesterday at 42.49 after spending nearly 2 months within this space here. Nearly 2 months. It's going to be 2 months in a couple of days since we've been in this particular range here. This was the anomaly of the drop to the 50 SMA, and then of course it continued to churn up. But it's still low volume. It's still low ATR or low ranges. This is a typical summer market, but that doesn't mean, this is something that I was discussing this week with students. They ask me questions in reference to markets, to summer markets, and how they move and so on and so forth. And I just emphasize to them that regardless of the low volume, regardless of the low volatility, if a market wants to move higher, it's going to move higher. It may not do it in the prettiest, most efficient way, but it will go higher. If a market wants to go down, it will go down. Volume and volatility have nothing to do with the sentiment of the overall market. So we have to understand that. Now, that doesn't mean, once again, that it's going to be elegant, that it's going to be efficient, the moves. They may be a little choppy, but there's still the direction, is still there. And this, last several weeks are pretty much have proven that to us. Now, what are we expecting next? Well, there is no reason to think otherwise unless something dramatic happens between here and the end of August. We're expecting the market to continue with this kind of movement. Every so often you'll have a big day for some, thing that just happened, so on and so forth. But this is what we've been expecting. This is what we have been expecting. This is what we continue to be expecting, at least in the midterm, short to midterm. What happens long term, it all depends on what kind of deal is made in Washington in reference to the new infrastructure, what's going to happen with interest rates, what's going to be happening with taxes, and of course with the quantitative easing from the Fed. So there's a lot of elements that are still variables that are unknown that have to play out one at a time. Too many things have to happen before we get to these decisions. So that's why the market is cautiously bullish. That's the best way to put it, just cautiously bullish. Let's look a little deeper behind these numbers here as we go to our next time frame here. And as you can see, after the market established a firm foundation and support, it launched to the upside very carefully. This trend line obviously kind of held us there for quite some time here. And here's where we find ourselves right now, between two key areas, the all-time high, the new all-time high, and of course this trend line here to the downside, which has been respected several times since its inception. So let's see what happens with this today. Obviously, the market can potentially do anything, but don't expect some huge wild jumps to up or down. I don't think we're going to have that type of support, as I mentioned earlier, in the next couple of months. So let's see a little bit behind as we look at our analysis chart, which is actually our trade chart here. As you notice, this is the all-time high. You notice once we establish it, we quickly establish our intraday low, which of course it's a pivot that we use as a trend line to the upside. Clear compression. Market is just here again, once again. Between two key areas, the top of this resistance area that can potentially be used as a support level, and the all-time highs. That's where the movement's going to be happening, at least in the early part of the morning. Now, can the market move lower? Absolutely. It can move lower. It can break below this, attempt to retest this particular line here on the way down, and potentially break that and attempt to potentially move a little lower. So that's what we're looking at now. Obviously, we can also come here and establish a new all-time high But right now, here's where we are. This is where we are here. So what are our first tests? First test is a support test. Second test is a resistance test. Any break above that, we're looking at this scenario. Any break below here, we're looking at shorts to at least this level. This will be our second support test, and eventually break through there, and then we're going to come back, test resistance, and potentially move lower. That's what we're looking at this morning. Hope you have a great weekend. Hope you had a great week, and we'll see you next time. Take care.